everyone! Welcome back to the channel! Today we're talking about something that can seem really complicated and intimidating, but is actually pretty straightforward once you break it down: investing in foreign currency. Now you might be thinking, Graham, why would I ever need to buy foreign currency? I live in India, and that's a fair point. But what if I told you that investing in foreign currencies can actually be a smart way to diversify your portfolio and potentially earn some serious returns? We're going to cover everything you need to know, from how to buy foreign currency from India, to the top 10 currencies with growth potential, to the pros and cons of this type of investment. So, if you're ready to learn how to potentially profit from the global currency market, grab a notebook, hit that subscribe button, and let's get started. Before you go throwing your rupees at every currency exchange kiosk you see, let's talk about the legal side of things. In India, you can't just exchange unlimited amounts of rupees for foreign currency without any oversight. The Reserve Bank of India, or RBI, has some rules in place. They want to make sure you're not involved in any shady business, and they also want to keep the Indian rupee stable. So, what are these rules? Well, for starters, there are limits on how much foreign currency you can buy and hold. These limits can change, so it's always a good idea to check the latest RBI guidelines. Trust me, you don't want to mess with the RBI. The good news is, for most individual investors, these limits are pretty generous. You can usually exchange enough to cover your travel expenses, make online purchases, or even invest a decent amount. We'll talk more about those investment limits a bit later. Now, once you're familiar with the rules, the next step is actually buying the foreign currency. The most common way to buy foreign currency in India is through authorized dealers. These are banks and financial institutions licensed by the RBI. Another option is to use online platforms. They offer convenience and competitive rates. Look for well-established, regulated platforms. Now that you know how to buy foreign currency, let's dive into the exciting part. Which currencies should you be investing in? Remember, the goal here is to diversify your portfolio and potentially earn a higher return than you would by keeping all your money in rupees. The global currency market is vast and constantly fluctuating, kind of like the stock market. But instead of companies, you're betting on entire countries and their economies. Exciting, right? To help you navigate this complex world, I've put together a list of the top 10 currencies with growth potential. Now, keep in mind, this is not financial advice, and past performance is not indicative of future results. This is just to give you a starting point for your own research. With that disclaimer out of the way, let's jump right in. The first currency on our list is drumroll. Okay, I'm not going to do a drumroll for all 10 currencies, but you get the idea. We'll be looking at factors like economic growth, interest rates, political stability, and even things like natural resources and demographics. Because all of these factors can impact the value of a currency. All right, let's start with the big one, the US dollar. It's the most traded currency in the world, and for good reason. The US economy is massive, it's relatively stable, and the dollar is seen as a safe haven asset during times of global uncertainty. Think about it, when things get crazy in the world, what do investors flock to? The US dollar. It's like the reliable friend you always call when you need a shoulder to cry on. But, and this is important, even the mighty dollar has its weaknesses. The US has a massive trade deficit, meaning they import more than they export. And the national debt is, well, let's just say it's huge. So while the US dollar is likely to remain a major player in the global economy for the foreseeable future, it's not without its risks. Just like any investment, you need to weigh the potential rewards against the potential downsides. In the next section, we'll move beyond the US dollar and explore some other currencies that offer diversification and potentially even higher returns. Stay tuned. All right, let's talk returns. Who doesn't love seeing their money grow, right? With foreign currency, the potential is definitely there. I mean, think about it. If you'd bought Swiss francs a few years ago, you'd be laughing your way to the bank right now. But here's the thing, with any investment, past performance doesn't guarantee future results. Just because a currency has been on a tear doesn't mean it'll stay that way. You've got to look at the bigger picture. Economic indicators, political stability, all that good stuff. And even then, remember, it's not just about one currency going up, you're always measuring it against another. So, if the Indian rupee strengthens while you're holding euros, your gains might be smaller than you expected. That's why it's crucial to do your due diligence. Don't just jump in because someone on YouTube told you to. Research, understand the risks, and maybe even talk to a financial advisor. Trust me, a little bit of effort up front can save you a lot of heartache down the line. Now let's talk about the elephant in the room, the risks. Because honestly, with any investment, there's always a chance you could lose money. And foreign exchange, well, it can be pretty volatile. 1 minute a currency's up, the next it's down. Geopolitical events, economic data releases, even a tweet from a certain someone can send the markets into a frenzy. And trust me, I've seen it happen. It's enough to make your head spin. Then there's the leverage factor. See, with Forex trading, you can amplify your returns using leverage. Sounds great, right? Well, here's the catch. It also amplifies your losses. It's like playing with fire. You can get burned real bad if you don't know what you're doing. So, before you even think about putting your hard-earned money into foreign currency, educate yourself on the risks. Understand that it's not a get-rich-quick scheme. It takes time, patience, and a whole lot of research to be successful in this game. All right, now that we've covered the risks, let's talk about why people invest in foreign currency in the first place. And one of the biggest reasons is diversification. You know the saying, don't put all your eggs in one basket. Well, it holds true for investments too. See, if your entire portfolio is in Indian assets and the rupee takes a hit, your entire portfolio takes a hit. Ouch, right? That's where foreign currency comes in. By investing in other currencies, you're essentially spreading your risk. It's like having a safety net for your money. If one currency goes down, another might go up, helping to cushion the blow. Think of it like this. You wouldn't just eat one type of food every day, right? You need a balanced diet for a healthy financial portfolio. And foreign currency can be a great way to add some spice and diversity to your investments. Now, let's talk about everyone's favorite topic, making money. And yes, foreign currency definitely has the potential for high returns. I mean, we've all heard stories of people making a killing in the Forex market, right? And it's true, the returns can be pretty amazing, especially when compared to traditional investments like bonds or even real estate. But here's the thing, those high returns come with high risk. Remember what we talked about earlier? It's like riding a roller coaster. You might get that adrenaline rush and reach incredible heights, but there's always a chance of a steep drop. So, you've got to be prepared for the ups and downs. But hey, if you do your research, manage your risk, and have a solid strategy, foreign currency can be a lucrative addition to your investment portfolio. Just remember, it's not for the faint of heart. All right. We've talked about the good. Now let's dive into the not so good. Because let's be real, foreign currency trading isn't all sunshine and rainbows. One of the biggest downsides? Market volatility. See, currency markets can move fast, like really fast. 1 minute you're up, the next you're down. And I'm not talking about small fluctuations here. We're talking about wild swings that can wipe out your profits faster than you can say exchange rate. There are a ton of factors that can influence these movements too. Economic data, political instability, even natural disasters can send shockwaves through the market. It's enough to make your head spin. And if you're not careful, this volatility can be your downfall, especially if you're new to the game or prone to emotional trading. Trust me, I've seen it happen. People panic selling at the worst possible time, locking in losses that could have been avoided. So, before you jump into the world of foreign currency, ask yourself, can you handle the heat? Because this market is not for the faint of heart. Okay, so we've talked about market volatility, but there's another beast you need to be aware of: currency fluctuations. See, even if you pick the right currency and it goes up in value, you're not out of the woods yet. Because here's the thing. You eventually need to convert that foreign currency back into your home currency, in this case, Indian rupees. And depending on the exchange rate at that time, you could end up losing some, or even all, of your gains. It's like a double-edged sword. You're essentially making two bets, one on the foreign currency going up and another on the rupee not strengthening too much against it. Talk about pressure. And the worst part? These fluctuations can be unpredictable. Economic factors, government policies, even rumors can send exchange rates on a roller coaster ride. It's enough to make you want to bury your money in the backyard. So, before you go all in on foreign currency, remember, it's a two-way street. You need to consider both the potential gains and the potential losses from currency fluctuations. Don't let those hard-earned profits slip away. Let's talk about the big dog in the global financial system, the US dollar. It's the most traded currency in the world. Oil, gold, even weapons, often traded in US dollars. This dominance gives the US a unique advantage. They can print their way out of debt because global demand is so high. But too much can lead to inflation. After World War II, the US was in a good position to call the shots. Will the dollar always be king? Challengers like the euro, yuan, and cryptocurrencies are on the horizon. While the US dollar enjoys a comfortable lead right now, there are some cracks starting to show. Printing money can lead to inflation. The US has been printing trillions to keep the economy afloat during the pandemic, causing the dollar to weaken. On top of that, countries like China and Russia are reducing their dependence on the US dollar. They're exploring alternative reserve currencies. So, is the US dollar still the global currency? For now, yes. But its dominance is being challenged. All right, let's recap some key takeaways. We learned how to buy foreign currency from India, use authorized dealers and online platforms, and check exchange rates. We explored the top 10 currencies with growth potential. From the Swiss franc to the Mexican peso, we analyzed economic indicators. Remember, do your own research before investing. We discussed potential returns and risks. You can capitalize on currency fluctuations, but the Forex market is volatile. Manage risk and make informed decisions. Diversification and high returns are advantages, but market volatility and geopolitical risks are factors. It's a delicate dance, my friends. The bottom line is this. Investing in foreign currency can be a lucrative way to grow your wealth, but it's not for the faint of heart. It requires careful research, a solid understanding of market dynamics, and a healthy appetite for risk. Don't go throwing all your rupees into the Forex market without a plan. Remember, diversification is your best friend. Just like you wouldn't put all your eggs in one basket, you shouldn't put all your money into a single currency. Spread your risk by investing in a variety of currencies, and consider using hedging strategies to protect your downside. And here's a golden nugget of advice. Don't invest more than you can afford to lose. The Forex market is unpredictable and even seasoned traders get caught off guard. So, start small, learn the ropes, and gradually increase your investment as you gain experience. In the next chapter, we're going to hear from some industry experts who will share their insights and advice on navigating the exciting world of foreign currency investment. It's always a good idea to get some expert opinions. When buying a house, you wouldn't just rely on your friend's cousin who flipped a house once, right?
You'd talk to a real estate agent, a mortgage broker, maybe even a contractor.
The same applies to investing. Hearing from seasoned professionals can provide invaluable insights. We reached out to economists, financial advisors, and successful Forex traders.
Expert 3's name and title, a veteran Forex trader, shared some practical advice for navigating the volatile currency market. They stressed the importance of technical analysis, using charts and indicators to identify trends and potential trading opportunities. They also emphasized the importance of risk management, setting stop-loss orders to limit potential losses.
Finally, we have Expert 4's name and title, who offered a word of caution. They reminded viewers that foreign currency investment is inherently risky and not suitable for everyone. They advise seeking professional financial advice before making any investment decisions, especially if you're new to the game.
Now, remember, these are just a handful of opinions, and it's crucial to do your own research and due diligence. The financial world is full of differing viewpoints, and what works for one person might not work for another. But by considering these expert insights alongside your own analysis, you'll be in a much better position to make informed investment decisions. So, keep learning, stay curious, and always be open to new perspectives. Now let's dive into some real-life examples to see how investing in foreign currency can play out. Imagine a tech entrepreneur from Bangalore. Let's call him Arjun. Arjun was building his startup back in 2010 and received a seed round of funding in US dollars. At the time, the exchange rate was around 45 rupees to the dollar. Fast forward a few years, Arjun successfully sold his startup, and the exchange rate had climbed to 75 rupees per dollar. By holding onto his dollars, Arjun actually amplified his returns significantly simply due to the currency exchange. This is the power of thinking ahead and recognizing the potential of foreign currencies. But it's not always a guaranteed win. Let's look at another example. Remember when the UK voted to leave the European Union back in 2016? That sent shockwaves through the financial markets, and the value of the British pound plummeted practically overnight. Investors who had bet heavily on the pound saw their portfolios take a serious hit. This highlights the inherent volatility of the foreign exchange market. It's a powerful tool, but it's crucial to understand the risks involved and diversify your investments accordingly. Here's another story, this time about a savvy investor named Priya. Priya noticed that the Japanese yen was historically weak against the Indian rupee. She did her research, understood the economic factors at play, and decided to invest a portion of her savings into yen. Over the next few years, the yen gradually strengthened against the rupee, and Priya was able to capitalize on those gains when she eventually converted her yen back to rupees. This demonstrates the importance of careful analysis and a long-term perspective when it comes to foreign currency investment. However, it's important to remember that past performance is not necessarily indicative of future results. The foreign exchange market is constantly influenced by a myriad of factors, from global economic trends to political instability and even natural disasters. That's why it's absolutely crucial to stay informed, diversify your portfolio, and never invest more than you can afford to lose. Remember, investing in foreign currency can be like riding a roller coaster. There will be ups and downs, and you need to be prepared for the ride. So, as we've seen, investing in foreign currency can be a lucrative opportunity for those seeking diversification and potentially higher returns. But it's not without its risks. The foreign exchange market is incredibly volatile, and it's crucial to approach it with caution and a well-defined strategy. Before you even think about investing, it's vital to do your homework. Thoroughly research the currencies you're interested in, understand the economic and political landscapes of those countries, and consider consulting with a qualified financial advisor. Remember, past performance is not a guarantee of future success. Just because a currency has performed well historically doesn't mean it will continue to do so. The global economy is constantly shifting, and it's essential to stay informed and adapt your investment strategy accordingly. Now, let's talk about some practical tips for navigating the world of foreign currency investment. First and foremost, start small. Don't go all in on a single currency or invest more than you can afford to lose. Diversification is key. Spread your risk by investing in a basket of currencies from different countries and economic regions. This helps to mitigate the impact of any single currency's performance on your overall portfolio. Next, consider your investment timeline. Are you looking for short-term gains or long-term growth? Your investment horizon will significantly influence your currency selection and risk tolerance. Finally, stay informed. Keep up to date on global economic news, monitor currency exchange rates, and be prepared to adjust your investment strategy as needed. Remember, knowledge is power, especially in the ever-changing world of finance. That wraps up our deep dive into the exciting world of foreign currency investment. We've covered everything from the basics of buying and selling currencies to the potential risks and rewards involved. Don't forget to smash that like button if you found this video helpful, and subscribe to the channel for more insightful content like this. And be sure to share this video with anyone who might be interested in exploring the world of foreign currency investment. Until next time, stay informed, stay invested, and keep crushing it.